Australian farmers have a set of tax concessions built just for them, and most farm books support almost none of them. If your bookkeeping has never produced a fuel tax credit claim, never tracked a farm management deposit, and treats livestock like office supplies, there is money leaking out of your business. The next 4 minutes cover the farm bookkeeping that actually pays for itself. First, why farm bookkeeping is different. Most bookkeeping is built for businesses that earn steadily every month. Farming earns in lumps when livestock sells or the harvest comes in, while expenses run all year. The tax system recognizes this with concessions designed for primary producers, and every single one of them depends on records kept properly through the year, not reconstructed in July. Start with the biggest one. Fuel tax credits refund the excise on diesel and petrol used off-road in your machinery. The tractor, the header, the pumps. It's claimed through your BAS, which means it needs a registered BAS agent and records showing the split between off-road use and the ute that drives on public roads. This is the most commonly underclaimed money on Australian farms, and for machinery-heavy operations, it routinely runs to thousands of dollars a year. Next, farm management deposits. In a good year, a primary producer can deposit pre-tax income into an FMD account and claim the deduction immediately, deferring the tax until the money comes back out in a leaner season. Deposits are capped at $800,000 per individual and generally need to stay put for at least 12 months to keep the deduction. The bookkeeping job is simple but unforgiving. Deposit dates and amounts recorded cleanly so your accountant can manage the timing without guesswork. If you run livestock, your books also need a proper trading account. Natural increase, purchases, sales, deaths and rations, with closing stock valued consistently at 30 June. This is the part of farm bookkeeping most generalist bookkeepers have never touched, and it flows straight into your tax position. And then there's the real job, seasonal cash flow. The difference between a farm that rides out a dry year and one that carries expensive debt through it is usually planning done 12 months earlier. Monthly bookkeeping gives you the raw material. What came in, what went out, and what the next 6 months look like against committed costs. From there, decisions about when to sell, when to buy inputs, and when to put money into an FMD stop being guesses. So if you're talking to a bookkeeper about a farm file, ask 5 questions. Have you claimed fuel tax credits through a BAS? And how do you record the off-road split? What records do you keep for FMDs? Have you run a livestock trading account? Are you a registered BAS agent, and what's the number? And how do you handle seasonal cash flow reporting? Confident answers to those 5 will pay for themselves. Anything less is someone learning on your money. The full written guide is linked in the description. And if you farm around Geelong, the Bellarine or the Western District and want a straight answer about whether your books are supporting the concessions you're entitled to, True Tally offers a free books assessment. No obligation, and you keep the answer either way. True Tally Bookkeeping, registered BAS agent 0 certified, and no silly questions.